Hi, my name is Victor Andrews. I have been able to get the analysis done. The currency strength meter is actually for the generation of the strength or the strongest instruments in the market. From what you can see, we can see that gold was stronger, coming up tops among all the instruments, followed by euro, then by Canadian dollar. Okay, and the weakest among the instruments that we're looking at for this week is New Zealand dollar, British pound, and Aussie dollar. The idea here is to merge the strongest instrument with the weakest instrument in order to get a pair and get a trending one at that. So for this week, we're looking at entering long on gold, Euro Aussie, Euro New Zealand, and Euro Pound. And we're looking at shorting Aussie card, Pound card, and New Zealand card. It's important for me to also point out that you do not have to trade all of these currencies. All you need to do is to seek out those instruments that meet your criteria, and you are able to see a very good place of entry where you minimize your risk and then have good profit potential. Having said that, I think we can go on to the chart to look at what actually is in the market. All right, so number one thing is we're supposed to look at gold, right? So for last week, we had a reason to go long on gold. If you had followed the analysis that I gave, my last analysis, go check it out. We said that we're looking at price being sustained above the EMA 200. We got a very good retracement, A, B, C, D, all right? We're able to have a very deep retracement to this level that coincide with a very strong former resistant area, turning out to be a very good support. And so we'll seek for an opportunity to go long. And from the strength meter for this week, we'll be seeking for opportunities to continue to pull the trigger for a buy. And so for every retracement, if price can break beyond this level, 1856, and able to retrace back into it, that will be fine, a good place to also go long. So even if we have a push to the upside, and then we'll have a retracement back to this level, if it holds, we expect that the move to the upside should continue. So we look at price hitting this particular resistance zone. Okay, so that is that for this week. And if price will retrace from where it is now, might likely come to this level and then a push to the upside. All right, so let's be vigilant. Always seek for that level where you minimize your risk and with a greater profit potential. That is for gold. We're looking at also entering Euro Aussie. We'll have to go pick that out. Euro Aussie. We're looking at going long on this pair. So we go from the top down. We go on weekly. Excuse me. Uh, okay, fine. So if you go on weekly chart for Euro Aussie, you find out that price initially we're creating lower highs and lower low. This low compared to this low or that low, you are doing that this low is lower. This low and this low, you are doing that it's somewhat lower, but you can say that this is a double bottom and price hits the resistance level EMA 200, breaking above this particular high, creating a higher high at this juncture. Okay, so we are looking at price being able to retrace back on this EMA 200 and we'll seek for an opportunity to buy. Of course, there's nothing wrong. You can see that price has already created a double bottom, this level here and this level here. Price, hitting that level and refuse to break below it. And so price is retesting this resistance zone at this point. So it's either we have an outright break to the upside and the retracement back to that zone. All right. It's either we have an outright break to the upside beyond this level, then a retracement back to this level, and then we can pick a buy. Or we seek for a buy as price come on the EMA 200 on this EMA 200. Of course, this is weekly chart. Let's go to daily. Okay, on a daily chart, you can see price has actually consistently been hitting this level and has refused to break below it. Okay. Okay, so the way it is now, price has created a higher high. The structure of the market is such that you expect that as price continues to come down, you see this high here, consider this high in relation with it. You say this is a lower high. This low is lower than this. But when you got to this point, you are agreeing that this low is higher than this low, okay, creating a higher low from there. And so since we have a higher high, higher than this point, you expect that any pullback should also not be lower than this zone. So this trend line will be a very good area where we seek to go long on Euro Aussie. All right. So we seek for an opportunity to go long on Euro Aussie as it hits this trend line. Another way to look at it is you use your Fibonacci tool and wait for a retracement to 61.8 level, which most likely will coincide with the trend line. So we're looking at buying around this zone. We're looking at going long around the 61.8 50% retracement zone. So this is the area we seek to limit our risk, minimize our risk, while seeking a good potential return. All right, that is for Euro Aussie. And another pair we're looking at for this week is Euro New Zealand. Let's try and get it out. Euro New Zealand. Okay, now I'll find you. Euro New Zealand. Okay. On weekly, usually we do top bottom analysis. You can see that price has already started reaching higher lows, and then we're having higher highs. Okay, so this low is higher than this low is higher than this. Okay, so we expect that structure to continue. This high is higher than this, so we expect that, and at any given opportunity, this movement should be upward. All right, so we seek for an opportunity to go long, and if price comes and hits this trend line, that's a better opportunity for us to go long, because what you now have is a convergence of zones. What you now have is a convergence of zones. See, this area is actually a support zone. And so when price comes down and hits on this area, where you have the trend line and the support area coinciding at a point, that becomes a stronger zone, to go long. Of course, this is on a weekly time frame. Okay, so if you're looking at it from a daily time frame, price has continually been creating higher highs and higher lows. And so we seek for the possibility that price will continually push higher, because currently price is above VMA 200, and with the momentum building, of course, you must note that this is like a channel. This is like, is it a channel now or a wedge? Okay, it's like a wedge. Okay, so price hitting the top and the bottom and continue the upside move. If it breaks above or below that channel, it could be an opportunity for a buy or a sell. Okay, so we'll keep watch on this particular pair, Euro New Zealand, understanding that currently price is above the EMA 200. Okay, there are so many things that I would have loved to detail in this analysis, but it's for the benefit of those of us who you already have your trading system. All you just need to know is the direction of the market and the opportunities you seek to maximize. So from this standpoint, I'll tell you, price has already started creating higher lows and higher highs, though it's still within the channel at this point, but it has continuously been showing you the possibility of a momentum upward. Okay, so be careful, but watch out. For me, I think you can omit this particular pair because it is not clear. All right, you cannot afford to risk your money on an instrument that is not well spelled out, not clear, that there is a trend already, emanating. So it will not be a good thing for a general to send out any of his comrades, without being sure that that comrade will come back, alive and well. All right. So that is that. The next currency or instrument that we're looking at is Euro Pound. Euro Pound. So in your trading analysis, you are expected to have a level of certainty, a level of assurance, especially in the light of the trend, in the light of the structure that is, being formed. Okay. So this is weekly. Price is currently resting above the EMA 13. And so with that doji forming around that zone, there's a possibility that price will continue the up movement. Okay, on daily, price is really not showing any sign, of continuing the upward move. So I think that this falls within that particular currency that you might, want to look away, except there's something extraordinary, that would attract your attention. Okay, so for me, this is one of the pairs that I might most likely not look at for this week. Okay, and then the next currency or pair or instrument that we'll be looking at is Aussie card. Aussie card. Please note that we look out for trending instrument. We don't want to waste our time or risk our money. Aussie card. So we want to filter and get those pairs that are what? That are trending. Aussie card, yes. Okay, so this is on rupee. Currently, price is below the EMA 200 or around the EMA 200. It has already shown a sign, okay, of weakness, moving down and forming a double bottom around the zone. It's pure price action. You can see that price has been, forming something close to being a double bottom. Okay, if you go on daily, I guess it will be clearer exactly. Okay, so this is a sign that there's a possibility price more likely go to the upside, and we are looking at an opportunity to short. And so if you look at it very well, you will see that this is most likely a head and shoulder pattern. All right, you can see there, this is the head, this is the left shoulder, and we expect the right shoulder to fall. And what you can do is to move your Fibonacci tool, drag it and pull down with the expectation that the price hits the level 61.8 zone and you see a rejection candle, then it's a good sign, a call for what? For a sell. Okay. So this is a 61.8 zone. Now we are looking at shorting the Aussie card. And for those of you that knows how to also be able to enter the trade, going long is not a bad idea because you have quite a number of pips to the upside. But you must do it carefully. Okay, so you're seeing almost 188 pips to the upside, which is not a bad idea. Okay, since price is hitting the neckline at this juncture. So hopefully price will retrace deep, okay, to form the right shoulder, and then from there we'll get a rejection that most likely will pull price to the downside, breaking this neckline and replicating the move to the upside at the downside. Okay, so replicating a move of 445, to the downside. So, I mean, it's more like around the zone. Okay, we test this level. So, what you expect to see is to have price move to the upside to this juncture, and then from that zone, you expect price to test this zone. All right, and then most likely bounce a little. Usually bounces a little, and then a break to the downside, which will now be a massive, massive potential profit. All right. So if you understand how the structure is being formed, okay, then you expect that, okay, this zone should, portray a certain level of support to price. This zone, expect it, okay. So you expect a bounce and then a down move up to 0.8666. That is the final destination of the price movement to the downside on Aussie card. All right. So then pound card, we're seeking at entering the market for a short trade on pound card. In case you want to learn how I enter the market as well, please look at the link below. You can easily subscribe and we can trade together within the week. You can see my trades. Okay, so what we have here on a weekly chart, we see price after hitting the EMA 200, came down, went back up, couldn't break above it, came down, broke below the support. Now it's now gone back, retracing this move to the downside, retracing 61.8. So there's a likelihood of a move to the downside. Of course, we are seeking for an opportunity to sell. If we go on daily, we're seeking for an opportunity to go short on this. Okay, so can't really see much activity or much opportunity as 12 on daily, but on 1 hour, you can easily measure this swing and then seek to enter. Price has already hit 50%. Okay, so we could from there drop or might go further to 61.8 before dropping to this same level of support. Okay, so I expect that price might go higher from 1.6365, getting around 1.6411, and then from there, might have we move to the downside. And the reason I said it might get to 1.6411 is because of this particular zone here. This zone here shows a former resistance zone to price. Okay, that's that. And then lastly, we're looking at NZD card, New Zealand dollar, Canadian dollar. So NZD card is the last pair or the last instrument that we're looking at going short on in this coming week. Just a moment. Okay. So price is currently at a very strong resistance zone. If you go on daily, you'll see that this zone was a support and has now turned to be a resistance zone. So if it doesn't break further up, it's a good place. It's a good region to short NZD card on daily chart. So we seek out opportunities to short NZD card for this coming week. And for where it is, if you can see a rejection candle on daily, then you're good to short this particular instrument. All right. I hope you got the information that is required for you to be able to trade profitably in this new week. If you have any question or clarification, please feel free to reach out to me. I'll be available even within the week. I'll be doing analysis, more deeper analysis anyway from our subscribers. And then you can also see me or watch me pull the trigger on some of these pairs. Price is currently sitting on a former resistance zone. It's sitting as a support right now. So let's see how it goes from there. This is a major support zone to price, which is turning to be what? A resistance zone. And if you go deeper, you'll find out that there is what? There is also a smaller support zone that is supporting price. All right. This is actually a resistance zone, all right, to price that has turned out to be a support to price at this point, you know, on a lower time frame. Usually, the higher time frame is usually stronger. So let's see how it plays out. Please do have a wonderful week ahead.